Okay, boom. So I'm going to share my computer audio too. So when the Fed chair speaks, you can hear it too.
Cool. So you're not sure which way it's going to go at the moment?
Okay, so this is what I was about to tell you. I have a pretty good idea, and I'm gonna tell you back here. Okay, so I don't know if you remember here. I don't think you were on. I don't know if you were on when I was talking about they were going to cone. It might have been.
Yeah, no, I missed it last week. I wasn't feeling too well, so I kind of I didn't go on any sessions last week.
Okay, yeah. So I had told them how they were going to probably drop overnight. I think it was this one right here where they dropped overnight.
Yeah.
Right here, they had dropped like 100, and they were dropping like 100 and something like pips. And then I told them, hey, they're gonna form a big cone. They were coning. When I first saw this cone, it was like right here, right?
Yeah.
So that's how come I knew when they came here. Like, so first it started out like this, how they kept touching, making lower lows.
Yeah.
Well, when I drew that norm, this is how I see when a cone is forming. I draw that and I see the false breakouts like right here.
Yeah.
Then I see them winding, and I knew. So I knew. I said, okay, this looks very much like a cone, like how I show y'all. Like here's another one within the cone. It's on the lower time frame. You see this cone right here, this
Yeah.
flag.
Is that
Yeah.
on like the 15-minute or the hourly or something?
Let me see. Let me see. It was, or it might have been even less. I think they were doing 1 minute or some shit. It was like a low time frame. Yeah, here it go. Yeah, it was on like the 5 minute and 1 minute. You see it?
Yeah.
That's another one. Remember, I've been showing y'all those. Those are very, very, very important. And they almost like continuation. It's basically a continuation flag.
So it's always going to go in the direction that it like is
That
going,
is
sort of
that
thing.
is going. Yes,
Yeah.
exactly. This is just them squeezing, faking out, and then coming. Because what you'll see sometimes too, they'll like snatch down and then come back up too.
Yeah.
And that snatch that they do down can turn into like something like a quick $80, and then they take it back up. You see what I'm saying?
Yeah.
So that's what sucks about that day I was telling y'all, man, I took that 2 band loss.
Yeah.
That I
Yeah.
and they did the FOMC meetings. It was the same meeting because they were making a big ass cone. They were making a big ass flag. In other words, it's like a trap. It's part of their trap.
They're just like collecting orders there.
Yep, they collect orders there and then continue on.
Yeah, I've been watching US 30. It's like it's the one thing I'm like concentrating on at the moment. And I've been getting a lot
You
of
can really
joy.
eat off US 30.
Yeah, like today I'm up like 200 quid. And it's like, but I've just been literally just getting like, like little bits of momentum in between tipping points. But
Mm-hmm.
like, because obviously it moves so quickly, it's like 100 quid trade and like, I don't know, like a few hours, or even less sometimes. It's
Yeah,
so,
it goes where you need it to go. Yeah.
yeah, I've just kind of like just been focusing on this solely, completely, and Bitcoin a little bit. But Bitcoin, I have had some good trades on Bitcoin, but it's also caught me out a couple of times. So
Because what Bitcoin does is when Bitcoin gets ready to break an all-time high, Bitcoin continues up, breaks an all-time high, and then they'll throw you some shit like these wicks right here, and you'll think, okay, maybe they're coming back up, and
yeah,
then they'll actually drop that motherfucker
I
three
think
bands.
that is actually literally, I think the trade, I think was that yesterday.
Uh-huh.
that was a trade that I getting in, trying to get in and buy, and then it went in a little bit of profit, and then they just snatched it down, and I was like,
Yeah, it's been like that since Monday. So the weekend, I'm telling you, the weekend is one of the better times to trade Bitcoin.
Is it?
Because the weekend is like you can do it every day, but the weekend it seems to be the most volatile. So and follow the most direction. You know what I mean? Like if it's pushing, because basically what happened this week, there was some fake information going around that something was going to be sold off. So a bunch of Bitcoin whales, that was basically a false information thing going around about them doing some big sell off. So people started selling their shit.
Yeah, it's just like word of mouth, isn't it? Even if it's true or not, people just like go with what they're being told, sort of thing. Go with the
Exactly.
crowd.
and you can get caught up in that real quick. All right, so let me make sense of this because what I'm gonna do is too. I'm gonna tune in the Fed meeting. I'm sharing my computer sound so we can all listen to the Fed meeting because literally, I was on with Francis before, right?
Yeah.
And we watched the Fed meeting, and immediately when they got finished, I said, "Watch, they're gonna do this, do this." You know, there's a chance you could be wrong. You know what I mean? And that's any trader should speak the truth, right? But I was like, watch this. They're gonna try to do this and do this. So they pulled it down. They kept coning. They were actually coning during the speech. They were making a flag in the midst of the speech.
Oh yeah.
And the speech got done. Were you on? Who's that?
Hey.
Oh, that's Robin talking.
Oh, I'm sorry. I didn't know I was on. I'm sorry. That's my son.
It's all good. Yeah. So and when they finished, they went directly up. They shot up like $150, $160. See what I'm saying? So it's like when the news is positive, like that's why I said with this, because this news could be mixed. Like the FOMC could give I don't, you know what? We'll see because the core retail sales. Okay, perfect example. I ate off of this right here. You see this core retail sales?
Yeah.
Let me show you. Okay, so that was the 16th at 8:30. That was right here. Look at it. Wait, hold on. Let me go back. Look at that. 157. Oh, it's 158. You know what? This is wrong. Let me change this. That's why I'm not Chicago. I need to go to where's Atlanta? Maybe I need to Toronto time. Okay, perfect. That's perfect. Okay, so let me go back. So let me see. So it was at 8:30 on the 16th. 16. 08. Okay, boom. Here we go. You see this?
Yeah.
So this is what happened when that news hit. This is what they were doing leading up into the news. So think about it. They'll tell you the Dow finished a little bit below, blah, blah, blah. But they won't tell you that before. Remember how I told you even before the raise, they'll drop it. They won't tell you it rose 80 something points before it dropped. But this is the drop that happened after that news, and I actually ate off of that. This was after that news. So I'll even just start it from here. But this is included now. That's the drop from the news.
That's crazy, isn't it?
Yep. And that was in an hour and a half.
Yeah, it does move really quickly.
Mm-hmm.
I've been watching it. It moves. I think that's why I like it, because you can kind of get in and get out, and you don't get like, do you know what I mean? If you get it in at a perfect point, you're not really stuck in drawdown for very long. And it just suits. I think it just suits me better as a.
And normally, if you are
trader.
stuck in drawdown too long, it's a sign that you hopped in at the wrong time or that you had a bad call and they're going, look at that. You see that
it
shit?
just shot up. Yeah, it's just literally.
You saw that shit?
Yeah. It's going.
I think it's a trap, man. I don't know. I think it like because it didn't even hit yet. You see that?
Yeah.
Let me see. Is he speaking yet? Come on. Ah, shit. I forgot I'm in. Live. I want to see it live.
The summary of economic projections, we only get these quarterly, so the last update we got was in December. And when you look at the much anticipated dot plots, which again map out where Fed policymakers see interest rates going, the median member of the 18-member committee still has interest rates at near zero through the end of 2023. But take a look at the distribution of the dots and you'll see that more policymakers are warming up to the idea of a rate hike before that time. Consider that in the December meeting, there were actually 5 members of the FOMC that saw at least one rate hike by the end of 2020.
Anyway, well, we weren't prepared like right at 2, but don't get FOMO. Don't get FOMO.
Like you said, they could be trapping. Could leave a massive wick.
Because there's news at 2:30 also, so it's not done moving. So we can get in. And to know when to enter, the best time to know when to enter is on the 1 minute. Because what they'll do is, let's see how they finish this. That's why I said the 1 minute. See, even if y'all don't take this trade, I want y'all to see how it goes. To let y'all know I don't like bullshit when I tell y'all this shit moves with news. You just saw that shit. News didn't even happen. Like it just like he didn't even like speak yet. Let me go to FO. Let me see. Okay, we're waiting on Yahoo Finance. See that nice size wick?
Yeah.
Got to see how they gonna do. Because that could have really been the trap move. Now, however, if that was a buy stop set, which I should have set one, that would have been the most nastiest. That would have been even with a 3-cent lot, like that would have been a couple of $100 easy. Okay, so let's see how they doing. I'll tell y'all. Actually, I'm gonna get my. This is where one of those times where you may have to do market orders. You understand?
Yeah.
You ready to get the fuck out? Yeah, I'm gonna be honest, I wasn't expecting them to push that fast. I'm not gonna lie to you. $184 that quick.
It's mad.
Let me see what the spread is real quick too. Yeah, but now this is, go ahead.
I was just gonna say, I bet it's really high at the moment, isn't it? The spread.
Well, no, it's only $1.97.
Oh yeah, mine's the same actually.
Like this one of those ones. See, look at that. You see what I'm saying?
Yeah.
That's what I'm telling you. Like that was the nice move. Let's see how it looks on the 15 though. You see what I'm saying?
Yeah.
You see what I'm saying? They can push now. Don't get me wrong. They can keep pushing. But when we see how that goes, then we can know for sure. This is why you don't get in FOMO. As a rookie, and I'm being 100, as a rookie on US 30, I used to trade these breakouts, right? Yeah. I would still use the same thing, but I would trade these breakouts because I was like making like nice money because I was seeing them. But then the more I stayed on it, the more I learned the behavior. Like it's fair, like you got to really look for them to be continuing, especially on the 1 minute. Because look how much they came back down.
Yeah.
You see what I'm saying? Now look at that whip, that wick. Shit, I just put a little quick scalp in for $87. But I did it low because it's moving like that. You know what I'm saying?
Yeah.
But you can do that on here. Like you see, so they snatched up, pulled back down, snatched up. That's why I'm thinking this is gonna turn into a whipsaw at some point, because that's happened to me before. Like if we go maybe to like the hourly or something. Well, nah, I don't know. Let me see. It's still a little bit. Let me see. Because yeah, they whipsawed on this one though.
Yeah.
Oh shit! Actually, they may actually. You know what? They may actually. I forgot about this. This right here. These
Oh,
may have
yeah.
been. Yeah, they actually. That's from yesterday. They were setting it up. It actually may be in good deal to go ahead and push some more. Let me see. But you see why I say watch the 1 minute, right?
Yeah.
Because it'll give you more of a. And
Yeah.
I've even gotten to. Go ahead.
I was just going to say, yeah, the 1 minute's kind of like helping me know when to kind of get out as well, because there's a few trades I've kind of let go, and then I'm like, oh, if I'd looked at the 1 minute, when it hit the tipping point, I would have pulled it straight away.
Yeah, and you would see when they were changing direction.
Yeah. So are you saying you can like literally ride it from structure to structure as well? Because I've literally just been playing within structure on the US30. I've not been riding it between structures.
Yep, like right. Yeah, you can. It's just during news, I will make sure I got when they're breaking to the top side to a new place.
Yeah.
That's when you really need to watch the 1 minute. But during like any other time, like say if it's like falling, okay, let me ride it here. Now look at this behavior right here. But remember this wick. You know what they're doing?
Trapping each side.
Because now this right here lets me know they're not ready to come down yet. This lets me know they're coming down, but they may push back up still. Like we could probably eat very fucking good off of this. I'm gonna tell you in a second. I'm gonna see how this 5 minute close. Actually, we'll watch the 1 minute. Just be ready to market order and close your trade.
Yeah. I've got it up.
See, this is why I don't just market order here, because they have a habit of pushing and then snatching back. Like what you just, I don't know if you've ever saw it before, but what you just witnessed was true impulsive behavior on US 30. Like when you saw how quick this went.
I've seen it move quickly before, but I don't think I've ever seen it move that quick. That was like really quick.
That's when you could do a market order, load that bitch down and get out. You understand what I'm saying?
Yeah.
However, when it's about to slow down, it'll do like what this candle did right here. You saw how it pushed, it stalled, pulled back down too much and push.
Yeah.
When these are pushing, they don't snatch down so much. They just go ahead and push. How does that 5 minute look? If that 5 minute can look good. Oh, go ahead, man. It's all good. Let me see what. So the 2 o'clock, we were just waiting on 2:30. In all honesty, they're just stalling for 2:30 to hit, so we can get ready to catch something. You understand what I'm saying?
Yeah.
Yeah, like they're stalling for 2:30, and when 2:30 comes, they're gonna make that move. Like this was the two. The thing is though, I was trying to catch because normally after the press conference, that's why I kind of want to see it live, because if you hear how he's speaking during the press conference, you can already know which way it's gonna go.
Yeah, just from like getting what he's saying, if it's good or
Yes.
bad.
Yo, I wonder if it's not letting me get it because I'm in Puerto Rico right now. See? Yeah, I think they're gonna probably like, how do you say? Remember how I told you this was the true wick direction,
Yeah.
and these are the correction. So these are letting you know we're gonna balance back out, and then we're gonna swing it back. Minute close. We'll see. We'll definitely see how this 15-minute close, and then at the reason I like looking at the 1 minute for sure though is because, like I said, you can see when they're about to impulse like a motherfucker. Like, you know what I'm saying? Like,
yeah.
you can see it. Nope. Got to go. Call me when you get back. Oh yeah, we just live watching this watching US 30. Yeah, I'm gonna be here. Let's see. Plays out. And like I said, the reason I'm doing this is because this is an all-time high.
Yeah, they keep making them at the moment, don't they?
Yeah, for sure. However, if things going like they're supposed to, it's gonna continue to push. The only problem with this is the volatility. Like, they'll push, come back down, and later on this shit will be up here. You just have to make sure your account can handle the volatility. You understand?
Yeah.
So that's the main thing. I am the freak. Are they not?
This is as expected, continuing this, not seeing any kind of tapering here. I think there'll be a lot of questions about this GDP change, but let's listen into CNBC just for a moment, see if we could add some commentary here to what they're saying.
Information that they've received, both the NASDAQ is up and the Dow has jumped. David, is this what you would have expected?
Yes,
Yeah.
I mean, if the Federal Reserve continues to, I mean, what the Federal Reserve is doing and has done for many years is fuel a huge bubble, or a boom, certainly, maybe not quite a bubble, but a boom.
Okay, he's going to talk about the bubble. Let's actually look at the sticks for a moment. So looking at the sticks, what's actually really interesting here is look at this. You actually see a little bit of a temporary spike that we had here at the release of the data, but that spike has already leveled back off. Now we're at about 1.656 on the 10-year. And if we actually look at some of the sticks here, which this is Webull, get yourself 2 free stocks with Webull by going to betkevin.com/Webull. Actually see the market overall. Let's see what some of these things are doing here. A lot of things moving up on this. I really think it's because of their change in GDP. Like, don't worry, we're not overheating. We're not going to see hyperinflation. Remember, this is the first time this year we have gotten the summary of economic projections. A lot of things pushing up on this. This is good. This is much better than expected. Look at this. Tesla going from red in the day to up in the day. We've got a Bitcoin relatively stable. I can't say that. Do we have a change here in Bitcoin? We did. We also had Bitcoin shoot up here, no tapering, so more money coming into the market, right? As we're expecting. It almost makes me feel like the market was expecting the Fed to like taper or something like that, which, I mean, I didn't see that coming at all. But yeah, no, the Fed's not going to taper anytime soon, in my opinion. But anyway, that GDP projection is, in my opinion, the big catalyst. And we're seeing the market react very positively to this, Because again, the Fed is clearly forecasting here. We do not think the market is overheating. We think we are doing the proper things to get to 2% inflation, and that's it. And so we're really seeing stocks of all criteria here or variety going up. Now we've got Nvidia's positive, Pinterest is positive. A lot of these stocks were red. I mean, we really just flipped the market here. Now, worst case scenario, Jerome comes out and says something silly. This could quickly reverse, and we'll be listening to every word he says. He begins to speak in about 15 minutes. There was a rumor that might get delayed, but that was just a rumor. He is speaking. It is scheduled on the Federal Reserve Board website as well. Let's listen for some more commentary here.
Fed Chairman Powell has to do everything he can not to change the way the market has reacted to this. They seem to be
in other words, can y'all hear me?
Yeah.
In other words, that's why I'm trying. You heard why I told you I wanted to listen to him, because it's so easy. If he's speaking like good, but things are going great, we expect to see such and such and blah blah blah.
Yeah.
They're gonna. You understand what I'm saying? Like, this is why I like US 30, because it literally moves with, because it follows stocks, but it also literally moves with just all news, all things US related. It moves with it so good. That's why I like it. You know what I'm saying? It's so damn predictable. Now, if you getting caught up in FOMO and you just trying to catch the next big move, it's easy to get caught up because the volatility, whatever. But for the most part, it's so damn predictable. It's a damn shame.
Is there cones on every time frame?
Yes. Just have to see them. Yep. Flags happen on every time frame. You see how it's the market correcting itself now?
Yeah.
Like the news was good, right? That additional $70-something push, and they brought it right back down. That's the thing about being careful. That's why I'm saying you have to be very careful. That's why I said let's watch the 15.
Yeah.
When this closed, they normally fill this a little bit, leave a wick. But they're going to come back up when they start showing signs of coming back up, especially close to when he's talking. We can just go ahead and, get ready. Again. Y'all hear me?
Yeah.
Yeah, my internet connection kind of went out for a second. All right, so let me
That's literally what I just said.
Forecast and outlook for the Federal Reserve, and it seems to be going okay for him at this very moment.
Yeah. All right, Steve, thank you very much. And our thanks also to Mona, David.
Yeah, I mean, it's true. This is good. And I really think it's adding this clarity, but it's not just that GDP change that we saw in that chart. And this is important too. It's also that they are clarifying their consistent messaging. They were inconsistent before on inflation. You can't tell me inflation is going to be here temporarily and then it's going to go down when that's not what your numbers said in December. And now they've changed that. They're becoming more. It's amazing how powerful this is. Piece of paper.
Yeah. It's like
paper. NFT. We should sell these as NFTs. Watch the Fed does that one day.
They have threaded this needle. It's quite amazing. We'll see how the press conference goes. Just take a look at the sectors. Throughout the day, because yields were higher, you had that usual situation, the reflation stocks, industrials, retail did better, tech did a little bit worse. But
the UK 100, that's why I was telling you, I want to check that out some too.
Is it exactly the same? Does it move exactly the same as US 30?
It is
off of its lows now. Some of these are also actually been going positive. So the overall market has lifted, not just any particular sector. These thematic tech stocks, tech ETFs, the clean energy, the solar stocks, all were dramatically lower here. They also have improved throughout the day. So the general market.
Hey, check this out. So I pay like a ridiculous amount for this service. and this is really cool.
It is.
And so take a
You're
look
right,
at this.
it is.
I think they have an algorithm that does this. Next time I'll pull this up a little sooner. But this is the Fed statement from January to March, which remember, they also had a December meeting. That's when we had the last summary of economic projections. In January, we just got a statement and no.
Let me. Kind of annoying because Yahoo is supposed to be showing him. Hold on, let me go. I'm gonna go back. Yeah, they were showing him. Yahoo. I guess I have to use this dude because not let me pull it up.
I wonder, and the reason is because she was a friend and she shared a birthday with my mother, who would have been 95 today. Another person of, two women actually of integrity, intellect, and character. So, if you permit me, I will start that way. And now I will respond to your question. So, let me start the answer by saying that Congress has given us two goals: maximum employment and price stability, and we have tools to achieve those. We're strongly committed to achieving them. Before the pandemic hit, we were very close to those goals. Unemployment was at a 50-year low. Jobs were plentiful. Wages were moving up, and inflation was also running close to, but a bit below our 2% objective. That was a year ago now. Let's look at where we are today. The economy began to recover last May from the very sharp downturn at the beginning of the pandemic and made good progress through the beginning of the fall, let's say. And then progress slowed sharply overall with the winter COVID spike, which reduced job creation for the last 3 months through January to about 29,000 a month, which is a drop in the bucket for an economy our size. So today, we're still a long way from our goals of maximum employment.
And that's the old one. My bad.
That's right.
Hey, I was like, wait a minute, it's not fucking March. Hold on.
Basically going to the moon, right? Because
like,
everybody's going to spend all their freaking money.
230 yet.
I personally don't believe they would be thinking that GDP is going to decline. If everybody went out there and they're like, that's it, it's boom time, spend everything, GDP would go up it'd go up maybe 6% this year. Then we get like this grand reopening in 2022. Everybody goes spends all their money. If that was going to happen, I mean, maybe it will, right? But let's say that did happen, GDP would be through the roof next year. Because GDP is, remember, it's the sum of all goods and services that are transacted in the United States, the total sum. So if everybody, spends 20% more, GDP can skyrocket, right? And we're not seeing that as a projection. So uncertainty about GDP growth. Okay, December projections, March projections. So less uncertainty. Risks the GDP growth. This is a little boring, these charts. Honestly, these other charts, nobody really cares about these here. Changes in real GDP, unemployment rate. Okay, that's pretty consistent here. Okay, yeah, forecast of uncertainty, whatever. So, okay, so we've got a pretty good outline here of what's going on in the Fed. If you're just now joining, make sure you get a breakdown of what I said earlier in this video, specifically, really, really important that you pay attention to this decline, this revision down in GDP right here. I guarantee you there are going to be questions on this in the Q&A. Why did you revise GDP down in 2023?
They're making a flag
and then
right
pay
now.
specific attention to the fact that we had this more consistent messaging now. High inflation now, lower inflation and stable inflation in the future. Those are the things you want to pay attention to relative to that really weird messaging that we got in December, which led to some increased, in my opinion. Now, let's take one more look here at the 10-year. We've got 6 minutes now until the Federal Reserve comes up. We are at 1.685% on the 10-year. On the top news, we have, let's see here, risky assets gain as Fed seeks to thread a needle. Okay, let's see what we got, what they're discussing here. The dollar decline is pushing the Mexican peso back. Okay, let's see, dollar is really dropping on the Fed statement, unlike bonds and stocks. Okay, so, oh yeah, that's a nice decline here. I don't want to run run the function. Oops. Oh, there we go. Okay. Oh, that's a nice dollar.
Because what
dollar
they can
sell-
do
oops, there
is
we go.
they'll
Nice
trap
dollar
down
sell-off
here
here.
and then shoot back up through.
I think they might be really scrolled in on this though.
Sometimes
Back here.
So we'll see.
What are they saying here? Okay, longer term, barely. Yo, sure. If you zoom out, it's barely a blip. So whatever. Let's see. The tweaks to the statement were pretty
Keep
neat.
your eye on it while I'm searching this, and let me know if something started looking to.
Okay.
Because they were supposed to show these things, but whatever. We'll see what it is. I'll see if they go live here. But you see how they keep ranging right here?
Yeah.
Like that was like, you want to hear something funny? If we could get to the 30, if we could have got to the 30-second like I was trying to, I would have been scalping the hell out of that. Because the 30-second would have showed you how they're moving the same, like wicks,
Yeah.
forcing direction back again. I know it looked like they're getting ready to, that's the little imitation breakout. Let's see. Just see. I'm gonna let this one close and then I'll see. But you see how quick somebody could have just ate off of that too.
Yeah, just like literally a couple of seconds.
Now you see why I say I don't just push the button yet.
Yeah.
Look at how quick they like redirect. And that's about to close. That's about to close like that. But have no fear. See, look, that's closing like that. Break out the flag and then they'll shoot. So what they do is they flag, skim this part, skim the bottom of the flag, and then do a breakout, but then come right back up to where they're going.
Yeah, I'm gonna have to mark them out. I haven't marked them out. I've just got normal structures, but it does make sense.
Yeah, see, so they throw a wick, come, throw a wick, play within here, come back here, and then you'll see where they'll break it, and then they'll actually come back in, and then they may play back, keep it smaller, and then finally do the big break. All right, let's see what it's looking like. Yeah, this flag is kind of not perfect like the ones I'm used to, but I can tell they're trying to do something. So we're just watching, see. This actually seems pretty normal right now.
So he's speaking at 2:30, 2 minutes.
Yep. Yeah, and if they keep closing these bodies close together like this, that's normally a sign of something too. Whenever you see like thick bodies like that, right by each other, that's like a stalled continuation. Yeah, go ahead, let them speak, stall out, and when they get ready to catch the movement or do the movement, we'll catch it.
providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice.
Can you hear?
The danger to the U.S.
Yeah.
economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread, but with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain.
I think they're gonna shoot up soon.
Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations, as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February, as the leisure and hospitality sector recouped about 2/3 of the. Nonetheless, employment in this sector is more than. Employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February. This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics.
Yeah, they balancing.
The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation.
I already put a buy-in. after
Beyond
they
these
threw
base
that and
effects,
see,
we could also see
wait
upward
on the
pressure
news
on
to get-
prices if spending rebounds quickly as the
Put a
economy
buy-in, did you say?
reopens.
Yeah, I put a buy-in.
Particularly
already.
if supply bottlenecks limit how quickly production can respond in the near term.
See,
Should I get in one now?
However, these
I would do a
one-time
low
increases in
risk
prices
because I think they're going to
are
go
likely
up.
to have only transient effects on
Just
inflation.
be careful. Just be careful.
The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back
Yeah,
up
put
by the
something
end of
in. Just put
2023.
something in.
Yeah, I've done it.
Be ready if
The
it
Fed's
looks
response
like
to
it's
this
gonna
crisis
shoot
has
the
been
other way.
guided
Just
by
be
our
ready
mandate to
close,
promote
but it
maximum
should
employment
ride
and
up.
stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in
Yeah,
our
I put it
statement
in
on
down
longer-run
here.
goals and monetary policy strategy, we view maximum
What
employment
they're
as a
doing
broad-based and inclusive goal.
Increase, bringing down.
Our ability
up,
to achieve
increase,
maximum
bringing
employment
down.
in the
I think
years
it's
ahead
they're gonna
depends
go up.
importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above
if they break
2%
this line here.
seems likely to occur this year.
You think they're
But
shooting?
not meet this standard.
Yeah, I think they're going to keep
In addition,
pushing.
we will continue to increase our holdings of Treasury securities by at least $80 billion per month,
See, I'm up 200
and of
some
agency
dollars already.
mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals.
Yeah, it's going in.
The increase in our balance sheet since last March has materially
My
eased
props.
financial
Didn't I
conditions
tell you?
and is providing
Yeah.
substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some
Let's
time
see how they
for
handle
substantial
when they get
further
about
progress to
right
be
here,
achieved.
though, because sometimes they'll
Our
still
forward
bring it
guidance for
down
the
and
federal
then
funds rate,
continue up. So
along
let's
with our
just
balance
watch and
sheet
see.
guidance, will ensure that the stance of monetary policy
I wanted
remains
to
highly
put double
accommodative
what I
as the
had
recovery
since I got
progresses.
in right then. I was like,
Our
I'll be
guidance
low
is
risk.
outcome-based and ties
Like, I
the
should
path
be
of
up
the federal
about
funds rate
500
and the
and
balance
something right
sheet
now, almost
to
600.
progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue
Yeah,
to
how
do so.
positive that is.
Yeah, it's
To
good.
conclude, we understand that our actions affect communities, families,
Yeah,
and businesses
100.
across the country. Everything we do is in service to our public mission. We are committed to using our full range of
100
tools to
too.
support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Yeah, told you. You don't even. You can catch the rebound right here and boom. Didn't I tell you they're gonna break
Yeah.
out? They'll come back up.
Oh, hi, Chair Powell.
Doesn't mean they're not
Thanks for
gonna
that.
correct
So,
and come back
would
down
you
here
talk
and
us
then go
through
back
how
up.
the forecast for
Where would you pull it then?
through the substantial further progress definition, 2.4% inflation? I
If
understand
you
that's
feeling
considered
comfortable-
transitory. That still
If you
seems
are
like some
feeling
progress there.
comfortable, pull it now. But I
4.5%
will pull
unemployment.
about right
Is it time to start
here,
talking
Yeah.
about
and then I will
tapering
pull
yet?
if they come, like if they show that they're gonna
Not yet.
break right here.
Yeah.
Here, I
So,
will.
as you pointed out,
I don't think they
we've
are.
said
though.
that we would continue asset
Like I
purchases
watched
at
this
this
shit
pace
too much that I don't
until
think they
we
are.
see
bro.
substantial further progress, and
I don't
that's
think they are.
actual progress, not forecast progress.
Now it is normal
So-
for them to.
and that's a
do
difference
this
from
right here,
from our past
they are
approach.
like-
So, and what we
after
mean
they
by that
do-
is
okay, you
pretty
see this?
straightforward. It is we want to see
Increase,
that
correct.
Yeah.
that
Increase,
the labor markets
correct.
have moved,
Increase,
labor market
increase.
conditions have moved,
Stall,
you know,
stall.
have made
Maybe a little
substantial
correction,
progress
and then they
toward
go up.
maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now,
This
that
is
obviously
live,
includes an
too,
element
no
of judgment.
bullshit.
And when
You know?
we see, we'll be
Yeah.
careful looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people.
If it closed with a wick, that's when you can expect for them to start coming down.
I don't see that at all. You know, we have a range of perspectives
remember,
on the committee. I welcome
flag,
that. And
sometimes they'll go straight up through the flag, but
we debate things, we discuss things, and we always come together around a solution. You know, the strong bulk of the committee is not showing a rate increase during this forecast period. And you know, as data improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would.
70 quid.
Look, that's why I said wait.
For liftoff.
I already pulled.
Don't worry, it may be a chance
of the
to get
committee
back in it.
doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect.
Yeah, they're going, aren't they?
Continue. That's why I
faster
said
progress
just wait.
On
now they may get
both
right
spending
here,
and you know, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but you know, we'll have to see it first.
Yeah, I'm at 420. I'm at 400 something.
Great, thank you, Victoria.
8 something, man.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. You know, there's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio?
So you see, you see, from start to finish, we just did US dirty. That's why I call it the dirty 30.
Yeah, it's good. Yeah, definitely.
And see how they got right here, and now they're showing. See that? They came exactly right. I don't even know why the fuck I picked that. Well, I know why, because normally they'll get right here, and then that's when they'll start showing. So they may come down a little bit and then go. But we can eat some more off of. But if you're comfortable, I'm glad if you ate something.
Yeah.
So today, with a I had a $59 loss, but actually I got $405 off of that. So today I made $434 in total.
That's good.
Just since I made.
I can't hear you.
No, I was saying I made that in 30 something minutes. See, look, they're pushing past now. But I'm cool with that too, though, so I'm not tripping.
Yeah, no, the 400's good.
Yeah, they're definitely gonna. I'm almost like I kind of wish I wouldn't have poured. They're definitely about to go. Like this could have really. This probably is gonna turn into $1,000 trade with that outside because I caught mine down.
Yeah.
What I played 6. I think I caught mine like right here. Yeah, like right here. Yep. So I caught all of that on the 6 cent lot.
6 cents.
Yeah, 6 cents a lot. You don't have to do much. Now, if I would have did $1, $1 would have been like I was trying to bet a 15 cent lot, which would have been $15 per dollar that it went up.
Yeah.
That would have been like money. But I was like, I should have went on and did it because that would have been so imagine that would have been 15 times.
That's nice.
15 times that. See what I'm saying?
Yeah. I was gonna say I just use 2 cent lots and 1 cent lots at the moment on US 30.
Well, yeah, for sure. It's one of those things on something like this where I know what it's gonna do. My only concern would be now not so much because I know how they move, But my main concern would be, oh shit, are they gonna like do a pullback that's gonna knock me out?
Yeah.
You know, more than is it going the direction I think it's going. So think about it. We could have called 2 trades, man. We could have called this one.
Yeah.
Boom, boom, boom. And then this one. And they're about to go back up. They are about to go back up with this. They're probably going to range somewhere here, but they're not done going up. I definitely don't think they're done. This right here lets me know they're just about to range for a little bit, maybe, and then they're gonna come up. But yeah, that's dope. I'm glad. Yeah, that's pretty fucking dope.
Yeah, it's good. It's good to watch it because I've not really traded news before. Because obviously I didn't really feel confident on my own, like trading news. But that was really good.
I wanted to catch this shit right here. That's why I drew this up. I was gonna catch it, but whatever though, right? You know what I'm saying?
Yeah, you're already good up for the day.
Yeah, that's why I started. Because what normally would have happened, I would have been waiting on this, and then I would have missed this shit right here.
Yeah.
And then I would have been like, you know, like y'all always hear. But I got to where I've been just looking, like I can trade whatever I want and figure that shit out like easy. It's just you don't want to like overthink stuff and have too many things on the plate. You know, like look at gold. Gold shot up to
yeah,
180 something. I wonder if Nemo caught that.
I bet he did.
See what Bitcoin shot up. See that?
Yeah, that's gone up loads as well.
That shit went up $2,000. Everything going up, but you see why I said what I said, right? Look.
Yeah, they've hit it, and then they're coming back
they're
down.
gonna do a little correction, but then we may be able to catch it again. Like I honestly think they're going to come back through here. Like so much so, I want to take it down. I want to take another trade. Wait and see how they do. See how far they come down. Especially if they leave us a bunch of wicks right here. Yeah, I mean, so this is about right because they came up already, correction, and they're gonna shoot up again. Yeah, I mean, if you good to go, you know, I won't hold you up. I just figured y'all might want to, you know, eat some of that, you know.
Yeah, no, it was good. Definitely worth it. It's like I said, that's made me, because I was already up 210 for the day, so I'm up 283 for the day now.
That's dope.
Yeah, it's good.
And when you get to where, and see, the truth is, I'm betting smaller lots than I can, only because I'm just managing risk extra heavy because of what I'm trading, right?
Yeah.
But the truth is, when you really get to where you're comfortable, most times it's gonna do what you think it's gonna do. So don't be like right now, right? Like watch this. If this closed like that, and I'm gonna go back to the 1 minute, or like if they leave a wick, whatever, but more than likely they're gonna pass back through this. And it doesn't seem like much, but the right lot size on this, you know, you can still make a couple of bucks. You know, if you're doing like 2 cents, it's gonna be like 30, but even $36, whatever. You know what I'm saying?
Yeah.
You can $40, whatever it is you want to bet, and make like you can scalp that shit and get it. So yeah, what they're doing now is they're doing the correction before they probably take it back up. I'm actually, but I want to confirm so I don't deal with unnecessary drawdown. Oh, Benji said he cleared money off Bitcoin. That's dope.
He cleaned up as well.
So yeah, y'all
cool,
y'all
Darius.
saw this live on Market Makers. Go ahead, Lucy.
Yeah, I was just gonna say, yeah, cool, thank you. It's really good. You on BMF tomorrow?
Yeah, I am. I didn't get on this morning. Like I've been doing stuff in the morning and multitasking, and like I said, I've been managing my injuries. And I'm out here taking care of my weapons permit, my licencia de arma, my weapons permit. So I've been having to go to like government buildings and police stations and shit. So yeah, so I kind of been, exactly.
Yeah.
Exactly.
Cool. Well, I'll let you get on then, Darius. Thank you for that. That's really good.
Hey, no problem. It's always my pleasure. You know, y'all still fam. I told y'all, even if I'm like ducked off, it's no problem. You know what I'm saying?
Yeah, for sure. Cool.
All right, cool.
All right, no worries. Speak soon. All right, bye.
All right.